If you're using Venmo, Cash App, PayPal, online platforms like Shopify, guess what? The IRS is tightening their rules around these transactions. And the 1099-K changes for 2026 are going to be impacting millions of taxpayers. What's up, guys? Mike back at it again. Ledgerly, co-founder, partner alongside my friend Andrew D'Amico, also a CPA, bring you the latest and greatest on tax strategy, accounting, bookkeeping, and especially for Q1, which we're in right now, compliance. If you love our videos as much as we love recording them for you guys, then make sure you hit that subscribe button and tune in weekly for videos just like this one. So here's the deal. More income than ever is flowing through payment, peer-to-peer transfers, online marketplaces, and the IRS is watching you. It's like Santa sees you when you're sleeping, knows when you're awake. So if you have earned any, and I mean any, income for your business, regardless if it was paid personally or through your business, topic for another day, keep those separate. But if you earned anything through Venmo, PayPal, Cash App, Stripe, Square, Etsy, Amazon, eBay, Airbnb, Turo, Facebook Marketplace, Shopify, Ticketmaster, oh my God, the list goes on. Then 2026 and going forward is the year that you need to watch this video, sit down, take notes, and understand exactly how the 1099-K works for you. Because let's be perfectly frank, most taxpayers don't understand what counts and qualifies as taxable income, what's excluded, and how to prevent the IRS from triggering letters and resulting in an audit for you. So today we're going to break down exactly the changes that you need to keep in mind when it comes to 1099-K filing requirements. So let's break down some problems and some common misconceptions. The first one is personal transfers. For example, you and your friend are going out to dinner, you're covering the bill, and they spend $50, you spend $50, you cover the bill, they send you $50 via Venmo. That's not taxable, that's a reimbursement. Now where the problem comes into play is using that personal Venmo account for business purposes. That might trigger an algorithm and result a 1099-K. Now, here's another problem misconception. The 1099-K does not equal taxable income. Now, it will be taxable income if you're a business owner with messy books and not taking advantage of deductions, similar to the 1099 NEC, if you will. You are able to take ordinary and necessary business deductions against that 1099 income. So what the 1099-K is showing is the gross amount of that income. It's not a tax bill. Now, another problem, misconception, kind of that we talked about for number one, is mixing business and pleasure. We don't want to mix business and pleasure. That is going to pierce your corporate veil as a business owner and potentially disallow you from expenses that you are able to take against that 1099-K income. So you know that saying, happy wife, happy life? Well, messy books, you might be on the hook for a massive tax bill. So let's break down the framework. What exactly do we need to keep in mind here? So number one, the 1099-K is equal to your gross income, and that is not taxable. That's not your taxable income. Because again, like the 1099 NEC, you're able to take those ordinary and necessary expenses. So let's say you have a little Etsy business and you're bringing in $20,000 on that 1099-K. Yeah. However, but you might have a Cricut, you might have goods, you might have $12,000 in cost of goods, you have another $2,000 in shipping, and then some other SG&A expenses, $1,500. Now that's going to bring your taxable profit down to $4,500. But the IRS doesn't know that. The IRS only knows this. So we got to make sure our books and records are in order so we can take advantage of these expenses. So then you're only paying tax on the net income. So here's the deal. As we talked about in our other 1099 video, that was focusing on 1099 NECs. And what that is for is that's for contract in your business that you're paying. Now, remember how we talked about, hey, if you're paying, a corporation or you're paying by credit card, how you don't need to issue a 1099 NEC. But guess what? If you're using that credit card to purchase things on Shopify, Etsy, PayPal, yeah, you're not going to issue that vendor a 1099 NEC. Instead, that payment platform is going to issue a 1099-K to the vendor that you paid. So it's kind of like, here's you down here, you're swiping your credit card to purchase those goods or services or whatever it might be. You're not going to directly issue the 1099 to that end vendor. Instead, the credit card company or the payment processing company is going to issue the 1099-K to them.